Hey guys, Mike here. So look at all this green right here. Oh my goodness, what the difference a day makes, right? Everybody was all panicked out yesterday, and shockingly, we're in a volatile market, right? And like I said yesterday, we've seen this movie, right? And so there it is, big bounce back. We'll talk about Delta in a few minutes here. They reported earnings this morning, so it's something to take note of. But you can see mostly almost everything's green. If there was red, it was just a slight red. A lot of high beta stuff going through the roof right here. Coin and all the other crypto stocks going through the roof. You can see Chinese stocks still looking good. You go through here, and all of a sudden you get to the big boys, and it's like, AMD, NVIDIA, slightly red. They did a fake out this morning. But then you get to the big boys down at the bottom with Google in them, and oh my goodness, look at this. 4 to 5% move on Netflix and Amazon. Meta continues to march. Tesla's bouncing back. Apple had a huge day. That is a big day for as large as that market cap is. And of course, the index has bounced back and closed at very important levels, which we're going to discuss. And of course, what I guess caused this was, hey, PPI, more inflation data came in better than expected, right? We had better than expected yesterday. The market goes down. Today, it goes up. And so, and you see, obviously, it was a nice drop right there. And then, of course, we had initial jobless claims, U.S. continuous jobless claims. And you can see, is the job market softening? Yeah, I think it is softening, which, of course, people can say, well, yeah, that means the Fed don't have to tighten anymore, and they can cut rates 3 times this year and all that fun stuff. And that might be the case. Now, I want you to understand, I'll put this in here now because I think it makes sense to say this now. This is from Stanley Druckenmiller, and he'll tell you, as he knows, he's been around a long time, the only way you beat inflation is to keep the Fed funds rate above the inflation rate, okay? We are currently there. We finally got there, right? But you can see what happened in the 70s. They cut the Fed funds rate. Inflation came back. Then they had to do the crazy mess of raising it to 20% to finally stomp it out. So you have to keep it above it. How long you got to keep it above it? Not really sure. But you have to make sure you have gotten rid of it, okay? So everybody wants to cut rates now. No, you cannot cut rates now. And the reason why you can't cut rates now is because of how our economy is set up. If you look at this right here, underlying inflation elevated with some signs of moderation, but the biggest one is the services, okay? Core consumer prices pick up, yet core services cost slowest in 7 months, which is a good sign. But what is our economy? 70% services, right? Everything else is falling off a cliff. You can see this right here. It's been really tough to try to bring this down. You see how elevated it is compared to just go over to 2019. And so obviously that's a big thing. That's why they have to try to get this stomped out now. Now, this came out today. Sentiment, I guess in a way, does it shock you or not? But the bulls dropped all the way to 26%. The bears, though, dropped as well. What picked up? People in the middle, right? Almost 40% is sitting in the middle now, saying, wait a minute, what's going on? Is this a bull market? Is it a bear market? Is it a bull market? Like, what are we in here? And I'll tell you why this is, right? Now, I gave it to the members about 5:30 this morning because my son woke me up at 3:30. And so I decided to get to work because I couldn't go back to sleep. Now, this is from Dan Niles, right? He's been pretty spot on with a lot of this stuff. And he's saying short term, they expect to rally, right? And then long term, though, they're expecting for the second half to actually be the real bottom. And the reason why you got so many people sitting in the middle going, this is a bull or bear market, is this right here. IT spending being worse than expected for the mega cap stocks, tougher bank lending standards and higher rates impacting global growth in the second half of 2023. U.S. consumers running out of the $1.5 trillion in excess savings by year end. Commodity inflation remaining higher than expected due to China exiting zero COVID. Potentially no rate cuts by the Fed in 2023 versus market expectations of 3 rate cuts starting in July. Looming problems in commercial real estate. That's a very hot topic right now. And elevated S&P valuations given inflation levels. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And if you want to throw 2 more in there, you can say the fact that in history, the market has never bottomed in a bear market. Why the Fed is raising rates and the banks are tightening lending standards as much as they are. So, that's one thing. But I'm going to tell you something how crazy this market is right now. Somebody please tell me what's going on here. You got Ferrari sitting there, is now trading with a higher price to sales ratio and a higher P/E ratio than Tesla. But look at this. Year-over-year revenue growth. Ferrari plus 4%, Tesla plus 37%. Year-over-year net income growth. Ferrari, negative 8%. Tesla at plus 60%. And I want you to look at this chart. Look at that right there. Ferrari is up 60% in the last 6 months. And then if we add Tesla into this, you can see the difference in these charts really fast. Tesla, of course, massive sell-off. Ferrari is just roaring up. Now Tesla's sideways, right? And Ferrari, though, here's what's crazy. Just set an all-time high today. You see, that was the all-time high back in November 2021. That candle right there, that daily candle, this is a new all-time high. So odds are this stock is going to continue to go higher. And I've never studied the company, and it don't even go that far back. So I can't even go back to what it looked like, you know, in the .com crash, no 08 crash. It don't go that far back. So if you happen to own a Ferrari, be big into the company or whatever, maybe you can explain that one because that just makes zero sense. But again, you know, like you said, fundamentals don't mean a whole lot of nothing because when you look at those numbers, you're like, wow, that is insane. But again, what else that new 52-week highs? McDonald's, Hershey's, WWE, right? I mean, stocks are going McDonald's. But when you look at McDonald's, especially the last 2 weeks, I mean, I know people making a killing on those call options. You know, it looks like a meme stock chart or something, and it's McDonald's. But yeah, I mean, they said there's going to be new leadership. So I guess the new leadership is Ferrari, McDonald's, WWE, Hershey's chocolate. I mean, I guess that's what's leading the way, you know. So let me know what you think down in the comments about that one. So anyway, getting into the stock charts here, you can see SPY finally breaks out right here and closes above it. We're going to get to see it starts right at this demand zone, or sorry, supply zone, excuse me. As you can see, it's been kind of a problem. But the good thing is you want to close the weekly candle. I think it's 411.70 or something like that. But you want to close right in that area for the week, which could be why we saw we got such a big move up. And that'll be very bullish if it can do that. Again, you got an incline of 5-day moving average. RSI is looking really good. MACD's extending itself. And so nothing bearish going on right there. Again, we got banks reporting tomorrow, so that'll matter. But you can see right out of the gates, you know, this thing just gapped up. So you do got a gap right there and just took right on off. Shoom, see ya. And didn't look back. And then if you go over the Qs, you can see we're stuck right in the middle of that weekly move, which I believe is like 318 to 325. And big green candle, but again, it's just sitting there more than anything consolidating, right? Hadn't really done much of anything right there at that level. And so RSI was just fine. It actually did have a bearish cross on the MACD, but now it's like it's about to turn back up. And so take a look at that. Again, right between on the weekly expected move, 70% of the time just about you end in this weekly range. And so there's definitely room to move up. Now, what I always tell you, this is a soap opera. That's what the market is right now, right? So what do you want to do? Leave a cliffhanger. What did it do? Apple, huge day, but it puts it right up against that trend line that's rejected off of now 4 times. So will this be the 5th time, or will it finally be able to push through this trend line? Again, you got the ascending trend line on the right there, 4 bounces off that. And so the good thing is it's going to break out some way. It's either breaking down or breaking up. Has pretty decent support at around 165 right there, I believe that is. And so, you know, we'll see what happens. But again, they love to leave a cliffhanger for us, right? Couldn't break through it today at all. So we'll see what that does tomorrow. Microsoft is another one. Same thing, right? Let's leave a cliffhanger here. It's sitting right at that supply zone again. Right? It's basically almost laying on top of the weekly expected move. And then, of course, you got that ascending trend line, which is projected off of now 4 times. And so when you look at this right here, it's just setting up to see if it can finally push through that supply zone and start moving up even higher. It's not going to be easy. It did have a bearish MACD cross, even though it's like it's trying to turn up again now. And so then we go over to Meta, and you know what I'm saying about Meta every day. What's happening? They're pushing it up towards to fill that gap, right? And so had a nice day today. Again, that gap right there you see above it, that is a 17% gap, which I'm going to label. So we'll see that every day. But currently, we are only now 13% away from the start of actually filling that gap. And then NVIDIA tried to pull a fast one this morning because you got that head and shoulders, I point out, on the hourly sitting there. And at the end of the day, sitting right on that neckline right there, right? But when it first started out, it actually broke the neckline this morning, and I can guarantee a lot of people started rushing in. If you can see on the minute chart here, if we pull over, right there, it broke down, and be like, oh yeah, and then look what happened. Complete reversal. Nope, ripped right on up, and then look at that huge sell-off. And then where did it end up? Remember, we got a soap opera going for the Oscars here. sitting right there. And this is the minute chart right there on that neckline. So will it break tomorrow or will we get another bounce? We will have to see. Now, of course, this morning, Delta reported earnings. Now, this is what we got to watch out for. How does the market react to earnings? What happened last quarter? What happened when MU reported? Disastrous earnings, right? Even the forecast, terrible. But they said, don't worry, third quarter, I believe it was, we're going to be good. And they said, wonderful. And the stock continues to move up, right? What happened the last quarter when we started reporting earnings, right? The market was like, just nitpicking the nuggets. It didn't matter if it was a double miss or anything. Didn't care. They would just look past it or try to find something and go, okay, great, we'll hold on to that. So, of course, Delta comes out, triple miss, right, on everything. But they said, don't worry. Hey, had our 10 highest grossing days, I believe it was, in the quarter. And then, the bookings had never been higher, so we're traveling, right? Because don't forget, there's not many airplane pilots and airplanes out there as there was before we shut down the world. And so, of course, they're cramming the planes. It's easy to raise your prices up because there's less seats available, right? And so they said, don't worry about it. So eventually it went green. It was 3% this morning when we opened the market. But then, of course, it ended up, I don't know, barely red at all, I guess you could say. And so that was another one, did a complete reversal. It went up, all the way down, all the way back up. And so when you're looking at these bank stocks tomorrow, which is reporting, we see right here, on Friday, we're going to get JP Morgan, we're going to get Bank of America, Citi, PNC, Wells Fargo, BlackRock. And so we have to pay attention, to what they say. I assume, JP Morgan will actually be good. Some of the bigger banks will be fine because they actually got a lot of deposits from the regional banks, but they still lost a lot of money over to the money market funds. But we need to see how the market reacts, not just on tomorrow, but of course going forward. What are they looking at, right? Do earnings even matter? Are they going to be double misses and guidance is terrible? And they say, don't worry about it. We're good to go, right? That's what we got to look out for. That's what's been happening. Again, the bar is low. I mean, it really is low, and Delta still missed it. So, and it wasn't really, I didn't think that close. But, we're going to have to see, right? I'm interested to see a lot of these stocks, especially the Apples and the Microsoft and the Google and all stuff, because their stocks are roaring, right? And they're at some major resistance levels. So that's what we just got to play out for. We don't know how the market's going to react because right now it's all about liquidity, right? Even though the Fed doesn't want to call it that, and that's exactly what it is. Whether you want to call it backdoor liquidity, whatever you want to call it, that's what the market's really moving off of the pause, moving off of the rate cuts that are coming up, and maybe they are, but again, for them to cut rates, they either got to be stupid or actually something bad had to happen. Okay? So again, that's what we're basing things off of. And let me know what you think about the Ferrari thing and McDonald's and everything else, right? And if you're in those stocks, God bless you. I'm happy for you, or whatever. But it's just, like I said, there'll be new leadership, and maybe that's the future. I don't know. Maybe that's going to be leading the next bull run. I guess so. So anyway, hope you got something out of it. Hit the like and subscribe button if you did. And I'll see you tomorrow, which will definitely be an interesting day. Remember, weekly options expire as well. So we'll see what we got going on. See you later, guys.